Okay, let's unpack this. Today we're taking a deep dive into the fascinating world of market charts and patterns, specifically looking at what the technical signals are telling us about TSLA stock right now. Our mission is to cut through all the noise and understand the crucial insights from various time frames, monthly, weekly, and daily, to see exactly where TSLA stands and, what might be on the horizon for its price movement. Think of it as peeling back the layers, right?
Absolutely.
Yeah.
And that's precisely the value of technical analysis. It's not about gazing into a crystal ball. It's more about interpreting the collective story the market is telling us. Through price action, through indicators, even for a stock as, widely discussed as TSLA, the charts offer a unique perspective, often unfiltered, on market sentiment and potential future moves. We're looking for patterns, understanding probabilities, and ultimately gaining a more informed perspective, moving beyond just the headlines to the underlying dynamics of supply and demand. It's like learning the market's subtle language.
Yeah, absolutely. So let's start with the broadest possible lens, zooming way out to the monthly time frame. Here's where it gets really interesting. When you look at the monthly chart for TSLA, what's the overarching long-term narrative that jumps out at you? Are we seeing classic bullish behavior here?
Oh, without a doubt. The monthly chart for TSLA paints a very clear picture, a robust long-term bullish trend. Definitely. We're consistently seeing the stock form higher highs and higher lows, which, as we know, is the textbook definition of an uptrend. Right now, as we speak, the stock is trading around, $368? So that serves as our current reference point within this pretty powerful narrative.
Okay. And diving a bit deeper into this monthly chart, what else can we discern about the sustained upward trajectory? Are there specific structures or indicators confirming this strength?
Indeed. Since January 2023, TSLA has been, diligently trading within a very clear ascending channel to the upside. Imagine a rising tunnel, right? And the price has been moving steadily within its boundaries. Shows remarkable consistency.
Right.
Furthermore, another strong bullish signal on this time frame. The price is currently holding comfortably above the 21-period exponential moving average, the EMA. And as you know, the 21 EMA often acts as a dynamic support level. Maintaining its position above it typically signifies robust upward momentum. So taken together, these monthly indicators paint a powerful picture. Long-term strength, a well-established bullish trajectory. It's like the market decided on a direction and it's, sticking to it.
That long-term strength sounds incredibly compelling, really strong. But what about counterpoints? Are there any subtle whispers, maybe? Signals that might suggest we shouldn't get too comfortable with this purely bullish view? What are the charts not explicitly shouting, but perhaps gently hinting at?
That's a crucial question. And it highlights the nuance, really, of technical analysis. While the price action itself, the ascending channel, the EMA, they all point to strong long-term bullishness, we encounter a critical counterpoint from the monthly relative strength index, the RSI.
Oh, the RSI.
Right. The RSI, which, as you know, gauges the momentum, the speed of price changes. It's actually showing bearish divergence here.
Bearish divergence. Okay, explain that a bit.
So, in a healthy uptrend, when the price makes higher highs, the RSI should typically confirm that by also making higher highs, indicating momentum is keeping pace. But in TSLA's case, while the price has been climbing, setting those new higher highs, the RSI is not following suit, it's lagging. Instead, it's either making lower highs or just failing to reach its previous peak levels.
I see.
This suggests that the underlying buying pressure, the oomph behind the moves, it's actually starting to wane. Despite the visible price appreciation, it's a quiet warning signal that the sustained bullish push might be losing some of its underlying vigor.
This raises an important question then for you, the listener, and for us too. How do we balance these seemingly conflicting signals? Do we prioritize the strong price action and trend, or do we heed the caution from the momentum indicator?
Yeah, it's where the art of technical analysis truly comes in. It's not always black and white. Often, traders might prioritize the immediate price action for, say, short to medium-term plays, but keep that RSI divergence as a yellow flag, maybe for position sizing or increased vigilance or thinking about profit-taking strategies down the line. It's about respecting both signals, but understanding their different time horizons and their potential implications for risk management. It tells us not to be complacent, right, even in a strong trend.
Right, that tension between a long-term momentum warning and immediate price strength. It's a classic dilemma. It's never just one signal, is it? So if the monthly chart gives us the grand sweeping epic, what kind of mid-chapter developments has TSLA been seeing? Let's turn our attention to the weekly chart now, because here's where things get really fascinating. Some incredible market resilience shown here.
Yeah, looking back to April 2025, we saw a really significant event for TSLA. The stock experienced a strong price rejection. This happened after it tested the ascending channel's lower trend line, that bottom boundary of our rising tunnel, and also a key demand zone near the $220 level.
Right, $220.
Imagine the price hitting a trampoline at $220 and then bouncing off it with considerable force. That rejection was powerful, a clear statement from the market.
That strong bounce from the $220 area is incredibly significant, isn't it? What does it tell us about the market's conviction and its response to that monthly RSI divergence we just discussed?
Exactly. That strong rejection in April at the $220 level vividly confirms underlying demand, underlying strength. It provides a powerful bullish counterpoint to that monthly RSI bearish divergence. It tells us that despite a potential, waning of long-term momentum, there are still eager buyers ready to step in when the price reaches certain foundational levels. This suggests deep resilience in the market's perception of TSLA. It's like the long-term trend said, hold on, not so fast, and the market responded with a strong affirmation of value at that level. This wasn't just a casual bounce, it was a firm declaration of support.
Okay. And since that bounce, how has that weekly picture evolved? Is it maintaining that midterm bullish momentum?
It is. Fast forward to today, and we see the price is currently trading above the 21 EMA on the weekly chart as well.
Okay, consistent there.
Yes, this consistently strong positioning above the 21 EMA on both monthly and weekly timeframes. It further confirms robust bullish momentum in the midterm. It's like multiple instruments in an orchestra playing the same tune, reinforcing the overall message. However, since May 2025, something interesting has been happening. The stock has been consolidating inside a symmetrical triangle pattern.
A symmetrical triangle, okay.
If you visualize this, it's like the price movements are getting tighter and tighter, oscillating within two converging trend lines, forming a triangle shape on the chart. This period of price compression is often seen as a build-up phase, a temporary pause where neither buyers nor sellers are firmly in control. Volatility tends to decrease. It's the market taking a deep breath, charging up for a potential breakout in either direction.
That market holding its breath analogy is great. I like that. What's the typical significance of a symmetrical triangle pattern, especially when it forms within an established uptrend like TSLA's? Does it give us a clue about the next likely move?
It absolutely does. The symmetrical triangle, as you mentioned, is a crucial formation. In an uptrend, it's often seen as a classic continuation pattern.
Continuation, right.
It signifies a period where the market is pausing, absorbing new information maybe, and gathering energy before typically resuming its prior trend. The tightening price action within the triangle indicates volatility is contracting. But this doesn't mean the market is quiet, it means it's building pressure. Think of it like a coiled spring.
A coiled spring, ready to pop.
Exactly. A breakout from this pattern usually signals the direction of the next significant move. So while it represents a period of indecision in the short term, it's actually a very purposeful phase, often leading to explosive moves once that equilibrium is broken. We often look for strong volume accompanying the breakout too. To confirm the conviction behind the move, it tells us that this quiet period is probably about to end, and a new, potentially significant phase of TSLA's journey is about to begin.
Okay, so if the monthly chart showed us the grand narrative, and the weekly chart gave us the midterm momentum, the resilience, and this period of strategic consolidation, let's bring the discussion right up to the present, or, well, the very recent past. Immediate implications. As of yesterday, September 11, 2025, this is where all those converging lines start to tell us something immediate. What's been the key development?
The key development here, the big news on the chart, is that the daily candle has now decisively broken out of that symmetrical triangle pattern we just discussed.
Ah, the breakout.
Yes. Not only did it break out, but it also closed convincingly above its upper trend line. This is a crucial signal that the coiled spring has finally released its energy.
Okay.
And critically, this breakout was accompanied by a noticeable uptick in volume, which adds significant conviction to the move, makes it more believable.
Volume confirmation is always good to see.
Always. Yeah. When price breaks out of a consolidation pattern like a symmetrical triangle, especially to the upside in an existing bullish trend, it often indicates that the period of indecision is over, and the bulls have taken firm control. The charge-up phase is complete, and the pent-up energy is now being released in the direction of the breakout. And to add even more weight to this bullish signal, the stock is also holding firmly above the 21 EMA on the daily chart.
Daily too. Okay.
Yeah, providing additional confirmation of strength, aligning with what we've seen on the weekly and monthly time frames. It's all lining up.
Wow. So what does this all mean for you, watching TSLA's every move and trying to navigate these market signals? It means we're seeing a powerful convergence of signals, doesn't it? From the long-term bullish channel to this recent daily breakout, it's like all the pieces of the puzzle are clicking into place, suggesting a potential continuation of that upward trajectory. The market isn't just hinting anymore, it's practically shouting about what might be next for TSLA.
Exactly. When we synthesize all this information from the 3 different time frames, the long-term bullish ascending channel on the monthly, yes, tempered by that RSI divergence. Then the strong demand rejection at $220 and the consolidation within the symmetrical triangle on the weekly. And now, the decisive daily breakout confirmed by volume, a very clear picture emerges. The monthly time frame provides the overarching bullish context, with that early warning from the RSI for long-term vigilance. The weekly showed us the market's resilience and a significant accumulation phase. And now, the daily breakout is the immediate trigger, the confirmation that the midterm consolidation is likely resolved to the upside.
So this raises an important question for anyone watching TSLA. What's the immediate actionable insight from all this data?
Right. Based on this comprehensive technical structure, we expect that the TSLA stock price could retest the $430 zone level in the coming days.
$430?
Yeah, $430 zone. This isn't just a random number. It's a target derived from the geometry of the patterns and the confirmed momentum. It's where the next significant resistance level likely sits, and where the market might next challenge the bullish resolve.
Okay, but it's never a straight line up.
Never. It's also important to consider that after a strong breakout like this, prices can sometimes pull back. They might retest the upper trend line of the triangle, the former resistance now potentially acting as support, before continuing higher.
A retest wouldn't necessarily negate the breakout then.
Not necessarily. That would simply be a healthy consolidation, not a failure of the breakout pattern itself. So for a short-term trader, that $430 zone is a potential profit target, maybe with a stop loss placed around the breakout level, perhaps just below it. For a longer-term investor, it might simply confirm the continuation of the underlying trend, reinforcing their existing position. It's about understanding the probabilities, yes, but also managing the potential for these smaller market dynamics and pullbacks.
What a journey through TSLA's charts, quite revealing. We've seen the powerful underlying bullish trend on the monthly, tempered by that important early warning from the monthly RSI. Then the weekly chart revealed incredible resilience with that bounce off $220, followed by that period of strategic consolidation, the triangle. And finally, the daily chart delivered a decisive breakout, confirming an immediate upward trajectory towards that potential $430 zone. It's a complex interplay, isn't it? A real dance.
It really is. This intricate dance between long-term trends and short-term breakouts. The whispers of momentum versus the shouts of price action. It truly challenges us. It leaves us wondering, are these patterns merely reflections of human psychology and collective behavior? Or do they, at times, predict it?
Yeah, it's a powerful reminder that the market is always speaking. If you know how to listen to its signals, definitely something to ponder as you watch TSLA's next moves. If you found this deep dive valuable, we encourage you to subscribe to our YouTube channel, Investor's Edge. And maybe give this video a like. It really helps us bring you more insights like this.